the intro, and then once everyone is back from the bathroom, we can kick it off. But I also did some research about Isabel, and I wanted to introduce her so she doesn't have to introduce herself. So Isabel has been helping to build up companies across Switzerland since 2014, so since 10 years. First for 2 years at startups.ch as CEO, and then with her own company builder Sunforms. She supports entrepreneurs and corporates from various industries in scaling, from ID validation, product service development, market entry to growth financing. She builds companies of her own and invests in startups. She was recognized as one of the top 100 businesswomen in Switzerland and is a Forbes 30 under 30 alumni. She studied business innovation at HSG and majored in social entrepreneurship at ESPP Europe, if I pronounce that correctly. She's currently pursuing a PhD at the ETH Zurich, conducting research on using AI in VC decision making. So call her up about all the interesting questions about that. She's a crucial member at the ETH AI Center, a board member at the student-led VC firm S2S Ventures, sits on the board of the startup Noi, invests as a business angel, coaches at InnoSwiss, and regularly teaches at various colleges and universities about entrepreneurship topics. Thank you very much for coming here and presenting your valuable insights. So I now hand over the microphone to you.
I hope you got an equally good introduction to Melanie. That was almost a bit embarrassing for me. And okay, what am I gonna do? And for those of you that ask me, I get this question a lot, like, how did you do all of this? And I'm a big fan of priorities and time boxing. And so that had freed up a lot of capacities for things. And also I built a company that was profitable under Sandboard, that we did 3D visualization, and that became a cash cow, allowing me to then use my time in different ways. So just that you understand a bit, because we just had a heavy venture-backed person here, because Antonia invests in VC. And that's also maybe what we're going to have in the afternoon, somebody who bootstrapped the startup, right? Melanie, is there somebody talking about bootstrapping?
I think Alex will cover a little bit, but if you already want to say something.
Because this is what we just heard from Antonia, and I think it's like, for those of you that have never dealt in VC, it may have been a lot of jargon, just Google it. And for those of you that know a bit more about it, I think it was very helpful to ask her a few questions. But basically, we always like to repeat this, and I'm going to look at pricing and how you're going to price your products and let you do this as a workshop. And you also have to do a profit and loss statement and a cash flow statement. Now, for those of you that are from HSG in your team, they should know technically how to do it. I don't know how often you're actually doing this. Those from ETH that have never heard about these things, I'm going to give you a 15-minute crash course on how I would think about this as an entrepreneur. But the main thing is that you have to also show in your financials is that you provide executional power, okay? And as a VC, they're going to be looking at how big of a market can you cater, what is your strategy to get there, and your IP, your novelty, is just one factor of a few things. The main thing is actually your resources, so who is in your team, and that's also where you're going to spend the most money as a startup. So you also, I think, heard a bit on how VCs think about investing. Now, my job with you until lunch is that you understand that hungry belly. So how much money do you need to build your startup? Are you clear about this? So let's see, in the future, you have this Rolls-Royce vision of your startup, and you're going to start somewhere now and you have to build it, right? And normally as an entrepreneur, you have to bootstrap. Bootstrap means tie your own shoes. You have to do this with your own grit, with your own capacity to build up the startup. So your biggest asset is your time and resources that you put in the beginning. And I'm a big fan of selling fast. So moving this hungry belly into actually turning sales, having a bit of cash in, okay? And HSG, I'm also an MBI graduate, I was told cash is king, and for the women in here, cash is queen. And this is my first message when we talk about liquidity. liquidity is extremely important to be operationally running. And I don't know how Melanie thinks about it, but when cash is running low in a business, it's terrifying, okay? So if you look at the Maslow pyramid of needs, if you've ever looked at it, like financial security is more elementary to our psychological well-being than self-fulfillment, okay? So if you're running out of money and you cannot pay for your business, you cannot pay for your private rent, you're going to be distressed on a high degree. So liquidity is king, liquidity is queen, and you have to manage it as an entrepreneur. And even to this date, most of the entrepreneurs and people that you're seeing in front of you are still sailing super hard to the wind. So we still like reinvest a lot of our capital. We're still like super hedged. There's in the press sometimes these Elon Musk like sells all his private things statements. Maybe you've heard them in the past, and this is just a reality in entrepreneurship that we really try to grow our businesses very closely to this profitability line. Like if you look at Galaxus, they could become profitable very fastly, but today they still are not, and they grow their businesses on the profitability line. Now, profit and loss. Concepts basically are very easily explained that you have costs for your business and you have revenue for your business. And liquidity is explained that money sometimes gets paid to you at a different time than actually your sale is done. Makes sense, right? Maybe you're going to say, hey, what is your name?
Tiara.
Okay, Chiara wants to buy something from me and we do a handshake today. And then I do something for Chiara and then I send an invoice 3 months later, right? So on the profit and loss statement, I see that the sale was done today. But on the cash flow statement, I see that money comes in 3 months later. So do you think that's a good business model and monetization model for a startup? Probably not, okay? So when we're building startups, we normally want to look at startup monetization that you are actually having payments done immediately to your bank account. And often on retainer-based or prepayment basis. I'm not sure how you guys did it, but there's like other examples that I've heard, like Controvista used to sell their software on a yearly base, and the software payments of the corporates came in on the 1st of Jan, right? Some corporates would pay them $1 million on the 1st of Jan, and then they could carry out the operation. So in this idea of cash is queen, think about how do I get cash in first, right? And how do I incentivize my customers to be locked in for a long time? Okay, so these are a bit like some principles that you want to think about, because you really have to push you and de-risk your startup the whole time, right? Right now, it's an idea that you've validated to a certain extent by tomorrow, right? But your job is to build more trust, have more customer engagement, more sales, and move your startup towards the smart product market fitting phase, which I normally think can take up, to 2 years, but that's a make it or break it stage. Startups that do not make the product market fit stage will not raise VC capital from somebody like Antonia that you heard before, or it's hard. Okay, this is the crash course of how to actually calculate this. And I'm going to keep it very simple. For those of you that are accounting and finance nerds, you're maybe going to say, Isabel, well, this was I would say a bit too basic, but this is pretty much how on a green field, I calculate the financials for the startup. So first we calculate turnover. So probably all of your startups today will not have a turnover, so you're actually writing a loss. But how do we calculate turnover? It's units sold. So how many units of your service, of your product are you selling and at which price point? Okay. I have 2 breakouts planned before 12, but I'm going to move it into one. And one of my breakouts was on pricing, or is on pricing. Okay. The thing that I see going wrong in turnover calculation most often when we screen startups is that you notoriously underprice, okay, as a startup. So often startups don't spend a lot of time on pricing, and I'll bring a few ideas on how you can think about this. to make sure that you're in a good sphere where you can actually turn a profit in the mid run. From the turnover, we deduct the costs of goods sold. Now, for those that studied business, what are costs of goods sold? Just give me a few examples. In your startup cases, what would it be? Yeah?
Production costs or the tech costs behind it?
Production costs and the tech costs. Good question. That could be cost of goods sold if it only happens on deployment. So let's say you deploy software to a customer and they need more compute to run their business on your software. Then that is cost of goods sold. Why? Because it only incurs, means it only happens when you sell something. So cost of goods sold. So only when you sell something, this cost happens. What are costs that are not cost of goods sold? Just shout out again an example.
Shipping.
Shipping. Yeah, that would be cost of goods sold probably too, shipping. Yeah.
I mean, probably don't have it in that stage, but HR costs, human resources, financial general costs, services, initial tech building costs.
Yeah. When you employ people, you're normally employing them no matter if you're selling something or not. The techie crew is probably just there programming, even if you're not closing a deal, right? So a lot of your HR costs are coming now after this. So turnover minus the cost of goods sold is gross income, okay? That was your first measure. Now, your colleague rightfully said it, we deduct salaries and HR costs, okay? Now, startups often ask me, Isabel, what kind of salaries can we ask for? So, as a startup, right, you're bootstrapping and you want to show that you're also personally invested in the startup. So if you ask, for 15,000 Swiss francs per month, I would look at you and go, really, do you really need my money to pay you such a high salary at the beginning of your journey, right? So it's always up to negotiation a bit on who you are and what you can ask for from the investors. Somewhere like a range that I would say at the very beginning is I know that you're a PhD, so like some of the researchers in here know, we already have quite low salary costs. So we're used to like the under limit, and the under limit in Switzerland would be like 4,500. Under that, it's hard for you to live off of. And from there, you can go up to the maybe 10,000 Swiss franc hurdle. If you ask in your first round for over 10,000 Swiss francs, most investors will ask you why, and you will have to justify and have a negotiation on that, okay? If you're de-risking your startup, so if you're running a fundraising round later on and you're going well, you can ask for more market level salary levels.
You're talking about salary per month?
Per month.
Okay.
Per month. Oh yeah, not per year. Oh no, per month. Per month. Yeah. And one message of advice. Who of you knows how much you spend a month on your living? I'm happy to see so many hands. Your first job of an entrepreneur is to understand what are your personal expenses, right? Because I think that also helps you to have a healthy relationship with how much you need to be paid, so you meet the Maslow pyramid of needs, of your personal needs, okay? So calculate that. I also have like a post-it at home that is on my bulletin board, and it says overhead is death. Why do I mean this? As an entrepreneur, I hate overhead. What is overhead? I guess most of us have not thought about houses, but if you have a mortgage, that thing is a bad beast of an overhead. If you buy a car on a leasing agreement, that thing, if you cannot get out of the leasing agreement within a month, if it's like a year or 3-year contract, that could be overhead. So, excuse my French, but if shit hits the fan, and in any entrepreneurial journey it will, financially speaking, you want to be able to understand where you can cut out costs of your business and where you can cut out costs in your personal life while still adhering to the Maslow pyramid. So that's why I live in rent. In Switzerland, the rental contracts are very favorable. We also have thought about getting more real estate, but we always saying, well, but then we have the super fix and we have it for so long, and I don't think it's that attractive. I prefer to invest my money in startups. Now again, this is very personal, okay? I cannot tell you that one size fits all. I'm just telling you also that personal finance has something to do also with how you can manage your salary. If the startup is not going well, I don't know if you've ever seen this happen. Sometimes the founders will then not pay themselves a salary for a few months, right? And this is hard. I have one of the startups that is doing this at the moment, and I also told them I don't think you can sustain this longer than a half a year, but they had to do it because they couldn't close the fundraising round, and they already had gotten a bridge round from the existing investors. Okay, so this is something you should understand. Salaries and HR costs are also the biggest block of your business in a lot of your cases, because kind of teamwork makes the dream work. And so a lot of startups ask me, I have no idea who I need. Do you all know in your startups who you need in the first year, in the second year, and the third year? In the breakout, I'm going to have you think about this. You know, the way that I like to approximate this is that, we don't have a lot of information of startups, but you can actually go on LinkedIn to one of your competitors and see who's hired. Just shout me one of your competitors of your startups that is a bit further than you. Do we have an example? Vexio. Okay. Oh, great. That is back because this is your computer. Okay, if I go now, it's hard for me to hold the microphone and do this. Can you get me into LinkedIn and pull up Vexio? If you go on LinkedIn and pull up Vexio, you can see the amount of employees they have, right? Sorry that I'm having you do this with me together, but it just helps. Oh, you're not logged in? Okay. That's the first step, right? And then you can actually see and then Google Vexio employee in tech. So you can actually see how big is their tech team, how big is their existing teams. So if you go on there and you go to people, you can get a bit at the top. Okay. And they have about 169 members. Now, this company exists for a few years and has an exit. Could you open Crunchbase in the next tab? So what also could be a bit misleading is that some of these startups have already received funding and have existed for a while. So in Crunchbase, I normally pull up how much funding did they actually get. What?
Since a couple of weeks.
Yeah, they locked it. Okay. Oh man. Okay, my example. Okay, but you can unlock, I think, one per day for free. Okay, so maybe. But you can see how long they existed. It's a 10-year-old company. So in your mind, you have to reverse engineer your financials to this first date, and then think about in this S-curve kind of growth that we normally see startups going through, right? That I showed you at the first slide. Where do they stand? Now, when a startup reaches maturity in sales and is really at the top of their market capitalization, normally you can approximate financials also through stock market traded companies. So in your case, if we can go, I never use Yahoo, but I do use Yahoo Finance. Okay, so hold your horses for Yahoo Finance. Do we have a big company that is in this field? That could be
Knox.
Fort Knox sounds like this. Yeah.
SAP.
Yeah, SAP. That's maybe an easier one for me to go for. So SAP is a traded company. So if you go on here and you go down to financials, then you go, sorry, on the screen here. You can actually see their profit and loss statement, which also gives you a percentage approximation on how they're spending their money, okay? But I don't have anything to, paint with you, but if you look at the S-curve growth of companies, they're at this top layer where there's not exponential growth anymore. But this is just a way that I would reverse engineer your financials to understand a bit what is realistic, what is unrealistic. Obviously, much better, and you have the drill on Monday, get on the phone and meet one of these founders and just talk about it, okay? So if we can go back to the slide, for me, it's the easiest, this is how we kind of like would navigate this. Now from the salaries, you deduct other costs. Other costs, what could they be in your startups? What kind of costs do you foresee?
Rent for the office,
Rent for the office, yes.
AWS operation costs.
AWS operation costs. Advertising costs, yeah. Sales costs. Yeah, all of this can kind of go in here. And then you end up with the operating profit, okay? From the operating profit, maybe you have heard of EBIT, EBITDA. Probably half the people in here should know this. What is the difference between EBIT and EBITDA? Depreciation, and the A is? Amortization, okay? So earnings before interest and tax and before depreciation and amortization is the operating profit. But we're trying to do a crash course here, but just if you see these abbreviations, that's what it is. Now comes the interest expenses and the depreciation, the amortization, all of this you have to put on there. And then you're going to have your net income and profit. Now, in the first breakout, I think this is really what I want to work through with you, is to understand how much capital do you need, right, to start your business. And you normally can also bootstrap a lot of it, but you have to understand this hungry belly. Because when we were talking to Antonia, she's basically offering you to give that hungry belly money, but she's offering it through equity. Are we all clear on what equity and debt is? Okay, because your two ways to actually get capital are giving away a share of your company or taking on debt. Did you talk about debt financing? No. Okay, who of you has a restaurant idea? Okay, good. So I'm happy we have it in the room. So if you look at popular restaurant ideas, you know the Bite, for example, in Zurich, the burger place, Yarbird, Brisket, they're all owned by it's owned by a family, by the von Matz. They started their restaurant businesses on debt because they initially had to get their rental costs covered to set up operations. But on early stage funding through debt, banks won't give you money. Banks only give you money on debt if you have collateral. That means for those of you who need some big fat machine to build your startup, nobody. But a machine would be collateral for the bank that they would sometimes give debt on. But normally the companies that give debt in Switzerland are Mikrokredit Solidaire, Go Kredite. And like, I remember Thomas and Curtania started their business with Go Kredite. They got about a credit of like 20 to 50K, and then they had to pay back interest. So these constructs exist. And especially for some business sectors, I see it happening more frequently, and the restaurant and gastronomy business is one of them, where I see in Switzerland people take on smaller loans. Okay, cash flow, I also briefly mentioned. There's three cash flow statements, but to be honest, as an entrepreneur, you can chuck them. You don't need these three cash flow statements at the very beginning. What you need to understand is how much cash do I have in the bank? Does somebody already have a business? Okay. So you know how much money is in the bank. You probably check it regularly, right? Okay, good. And then you also know when you have to pay bills, right? And that's the cash out. So basically you can imagine your cash flow statement to be like what's in the bank and what am I pushing out of the bank. And that's the cash flow that you're managing. Okay. The third financial statement that you need, that I always do with accountants, is the balance sheet. The balance sheet is a statement that looks one time per year into your company and estimates the value. If your company is a bit further, this is also how you're going to be evaluated by investors. At this point, the balance sheet is not that relevant. But what you do is you basically see how much money do I have in my company? So what is the worth of the machine? What is the worth of the people? What is the worth of the software that I have in there? And you put it against the costs that you had to develop the software, to buy the machine, okay? And that's how you would book it. And normally accountants do this. The two that have a business, are you doing your accounting yourself or do you have it outsourced?
We're building accounting software.
Okay. Okay. So you're doing it yourself.
Outsource.
Outsourced. I normally outsource that as well. The minimum costs you have to put in your profit and loss statement for accounting are like 2,000 to 5,000 Swiss francs per year, I would say, to get the 3 financial statements you need for the government. That is a profit and loss statement, a cash flow statement, and a balance sheet. Okay? Now, KPIs. I see a lot of entrepreneurs not track their KPIs. I said cash is queen, cash is king. That's your first KPI. The other ones that you should be monitoring if you want to get money from Antonia is how much time and effort and cost do you have to acquire your customer, and how long does the customer live with you? Because then these acquisition costs go down over time. Good. So now it's up to you all to actually build a profit and loss statement. Now, what I do as a startup, I don't know how you two did it, but I basically build a profit and loss statement. Then I take my bank account number and hold it against the cash flow. So I do a cumulative cash flow statement. That means I look at how much money is coming in, and is it coming in on the same month or is there a lag? And I put the cumulative cash flow on the last part of my Excel sheet. You're all familiar with Excel? I know there's new fancy tools out there. Where do you have your statements?
In our system.
Are you in your, okay, this is the funny one. Where do you have in Bexio as well? Okay, you're also calculating the profit and loss statement in Bexio, not Excel. Okay, so like I said, I normally for this breakout would say just make an easy spreadsheet and get yourself organized. I think it's good enough to have the first 3 months calculated, but an investor like Antonia would require 3 years of forecast and a month-by-month forecast, okay, that you would have to put together. She also dropped the name ARR, okay, and that means annual recurring revenue. So when you're accumulating your revenue at the top, they will ask how much of that is reoccurring. And what is a MOM? A month over month recurring revenue. Okay, so there's a few like abbreviations that you're going to see investors drop, but I would let you now set this up in the breakout, and then we come back after the breakout and I give you a briefing on pricing, and then you can go to lunch. Okay, so now somebody has to call me on time so I know how much time break is. 11:20. So I would say we all get back here at 10 to 12. I give you a briefing on pricing, and until then you should have at least the first year mapped out of your financials with a cumulative cash flow. I will walk around to the teams and see how it's going. Okay? Good.